Hello and welcome to Business Morning right here on Channels Television. It's another trading week and it's a rainy, so wet trading day today, and definitely we know the investors are still out. Regardless, and it's a holiday shortened week, so we'll be tracking all of that for you this week. But let's get a check on oil now. We're seeing oil prices, they're falling after signs emerge that United States and Iran may be moving closer to a peace agreement that could reopen the strategic Strait of Hormuz, a vital route for global oil shipments, and we're seeing the huge impact there with Brent crude below $100 per barrel now, 4.44% drop, about 5% drops earlier. It's a very volatile market, 4.91% lower. That's what we have for WTI crude. President Donald Trump says a framework for a deal has been largely negotiated, raising hopes of easing tensions in the Middle East and restoring energy supplies disrupted by months of conflict. And, you know, we see the impact right there on the price. And it was a negative trading week. That's for Brent and oil, for Brent and WTI last week. They were both down. And we also saw metals down last week. So is that going to play out again this week? We'll definitely find out. But it's really a big drop we have to kick off this trading week. Let's get a check now what's happening. Activity in the Strait of Hormuz. Now, we see shipping activity through the strategic straits there. We have about 33 ships transiting now. So this is much better than what we've had previously. On the average, we're dealing with about 1 to 3 ships at this point. And we see in the last 24 hours, 33 ships have passed through. The average, daily average, normally was about 60, so about 55% right there on the Strait of Hormuz, which is a good sign at this point. Let's look at the risk premium now when it comes to insurance. Definitely, we know we track that. The war risk insurance is extreme. The premium is 4.5%. So if you're transiting there, pay about 4.5% right there for insurance. The normal rate used to be about 0.15%. So we're seeing about 30x increase there. So definitely a huge price to pay, you know, transiting the Strait of Hormuz. But it's much better. We're seeing 33 ships navigating so far in the last 24 hours. All right, let's get a check on how your money performed last week on the local bourse to see the market ended in negative territory, snapping a 7-week winning streak so far. So we're seeing profit taking. So I guess it's safe to say the month of May, investors did sell in May. They did take profit in May, you know, seeing where we are right now. For the whole trading month, we're up maybe about 2 point something or about 3% so far. So yes, it did play out. Also, beware the eyes of March. In March, that also played out for that trading month, even though April was a stellar performance there, about 20% rise. Volume, value, and deals traded for the week was much lower, 3.87 billion units of stocks traded, valued at 161 billion naira, 334,000 trades, deals. That's what we had for the whole trading week. If we look at other parts of the market now, for the trading week, we see the sector performance, banking, oil and gas. Oil and gas was technically near flat, but to the positive side. Consumer goods, 0.84% lower. Industrial goods, 1.24% drop for the trading week. Insurance, 1.77%, breaking away from what we had from the banking counter with a 1.11% advance. Normally, they follow each other, you know, financial services, but we see a breakaway there from the insurance sector. Let's move on to the gainers for the week now. Big 44.82% rise for ABC Trans there, 6 naira 27. Closed at 9 naira 8 kobo. Academy Press, University Press PLC, following each other at this point. We call it the press rise, 29.79% and 28%. Then we move over to the laggards for last week, Sovereign Trust Insurance, and we see that played out. That actually played out for the insurance sector. Transnationwide Express, CAP PLC also dropped 22.45%. That's for the whole trading week. So if you were in Associated Bosco PLC, definitely you did smile to the bank for that trading week with a 44.82% advance. So we'll see if we'll get a a positive close for this holiday shortened week, but it's holiday shortened, so it might be thin trading we might see this week. To other news now. The Center for the Promotion of Private Enterprise has warned against what it describes as blanket import liberalization, saying excessive dependence on imports could weaken Nigeria's industrial growth and economic resilience. The group's concerns follow recent calls by the World Bank for wider fuel import access to help ease inflation and supply pressures. But the CPPE argues that relying heavily on imports could undermine local refining investments, increase pressure on foreign exchange reserves, and slow the country's push towards self-sufficiency in manufacturing and petroleum production. Nigerian foreign reserves definitely were seeing a rebound there, but going by what the CPP is saying, is warning against liberalization there when it comes to import liberalization. All right, let's flip over to what played out for the external reserves there. We keep tracking external liquidity, and we've seen some improvement so far. We see for April, it was $49.18 billion. That was the foreign reserves for April 1st, 2026. Then flip to April 30th, 2026, about $48.36 billion. May 4th, 2026, we did see a drop there, but still around that $48 billion level. Then May 21st, 2026, we see that uptick there, accretion, $48.89 billion right there. That's what we have for our reserves. And, you know, we did start off April with a high there, but we've lost that $49 billion level. But now we're seeing accretion so far, and this is happening at a time where we've seen oil prices rise so much recently. So we'll definitely keep tracking the reserves at this point, and you know what the CBN has to say. Definitely, we did hear from the central bank governor, Mr. Cardoso, last week. We did have the meeting, and definitely he did, you know, talk about the reserves, and positively they're seeing accretion, but there were concerns about the war in Iran so far and rising energy prices, what that means for inflation going forward. Then we flip over now to a story from the World Bank. We've seen Nigeria's debt exposure to the World Bank's concessional lending arm, that's the International Development Association. That declined by $200 million in the first quarter of 2026, offering a modest sign of easing external borrowing pressure. But despite the quarterly drop, new World Bank figures show Nigeria's total IDA debt still climbed nearly 7% year-on-year to $18.5 billion. There you have it for March 2026, $18.5 billion. March 2025, it was about $17.3 billion. So we see that drop if you're, you know, checking it quarter on quarter. December 2025, $8.7 billion. So that's exposure right there to the IDA. That's for Nigeria. Flip over to other parts of this data now. We see it fell about $200 million. That's debt there. Quarter on quarter decline by 1.1%. I guess that's a bright spot right there. Indicates, you know, modest easing in short-term borrowing. That's for the first quarter. Then if you look at the countries now, the top debtors there to the IDA, we see Nigeria comes in much lower there, about a third. Number one, that's the top IDA borrowers. We have Bangladesh there leading according to the data. Then we have Pakistan. And Nigeria comes in third place. So that's the latest right there. We keep tracking debt and borrowing, especially as you know, we also try to track revenue. The government is making enough revenue to cover, you know, most of this debt. So that's the latest one right there from the World Bank. All right, to some company news now. Nigeria's leading paints and coatings company, Chemical and Allied Products PLC, has officially launched Spruce, a new mid-tier paint brand developed under the Dulux portfolio to serve Nigeria's growing demand for affordable, quality, durable, and accessible paint solutions. The unveiling took place at a media and partner parley in Lagos, bringing together key industry stakeholders, and marks a significant milestone in CAP PLC's strategy to deepen its presence across multiple consumer segments. Take a listen.
The reasons why we felt okay.
It's a colorful afternoon as Chemical and Allied Products Company hosts the media, building professionals, and other partners to officially introduce Spruce. Available in 4 product variants: acrylic satin, emulsion, textured, and gloss.
CAP in partnership with AXO has helped.
The managing director, Bolarin Okunowo, describes spruce as a strategic response to evolving consumer realities and growing demand within the mid-tier market segment.
Over the last few years, we have seen a younger generation enter the real estate market, demanding for more in terms of creative and interesting spaces, exciting and intricate color palettes, natural yet contemporary arrangements, environmentally and ethically produced products, and all of this at an affordable price point. I am therefore delighted to introduce Spruce, our response to consumers' quest for more. A purpose-built product engineered to deliver real quality, reliability, and style at a price point that is accessible. It is specifically designed for projects where economics matters, while still benefiting from an AXO Nobel-backed technology and CAP's technical expertise.
The launch is also accompanied by the Show Your True Colors campaign, a bold consumer platform designed to celebrate individuality, self-expression, and the emotional connection people have with their spaces.
Today, we see 2 very important trends. A large population of creative, aspirational, and discerning consumers, and a consumer with multiple competing needs for their naira and kobo. The launch of Spruce aims to address this by introducing a fun, sophisticated range under the iconic Duloc brand in a manner that is friendlier on our wallet.
To be able to bring to the market a product that everyone who is seeking affordable and well-priced products without actually reducing the quality, that is a great feat and something that is great for the market and the industry.
For over 65 years, CAP has remained at the forefront of Nigeria's paints and coatings industry through innovation, quality, and strategic partnerships. The company says it remains committed to expanding access to high-quality paints, ensuring more Nigerians can enjoy stylish living spaces with Duloc's trusted standards.
All right, this morning we're talking smart money moves as economic realities continue to reshape financial decisions across Nigeria. More everyday Nigerians, especially young people, are turning to investing as a way to grow and protect their wealth. From inflation and currency pressures to the rise of digital investment platforms and financial awareness campaigns, retail investing is gradually becoming part of mainstream financial culture. This morning we examine what is driving this shift, how financially aware Nigerians have become over the years, and why more people are beginning to understand the difference between simple saving money and building long-term wealth through investing. Joining me for this conversation, we have Mr. Tondai Isiaka, as MD, DLM Securities Limited, and he joins me right here in the studio. It's great to have you, sir.
Thank you so much. Thank you for having me.
Yeah, very wet investing day. Right now, thank God we all made it without our suits getting
thank you
soaked.
too. Yeah, and the other was so terrible.
This morning, and,
yes.
and traffic out there, you know, coming here, we see the travelers.
Yeah, correct.
They're moving, they're migrating, you know, at this point. All right, so we're seeing, you know, everyday people now in the country. Everyone's talking about investing. Everyone's talking about the NGX. But what I don't like about when everyone starts talking about maybe a particular asset class or a bourse is they start talking a lot when it's getting so bullish, when it's in territories that maybe it's 100% higher, 300 or or more, percent higher. That's when people start talking a lot about a particular asset class, and I guess that's happening, right now. Talk to me about what you feel is driving this at this point. Is it poverty driving people to invest? What is it really?
Okay, thank you so much. That question is very, very germane. People in Nigeria, they started to believe that investing in capital market can actually make them to unlock value. like in the past, if you look at the number of people that actually participate in the market, they are very low. Now, because of the government of the day, government have been able to put up macroeconomic policy that is favorable to the market. And that you can see that the market is going up right from the time this government has taken over. I think this government is a pro-market and people just want to participate out of it. Apart from that, if you look at it, that the level of poverty in the country is nothing to write home about. People cannot use their savings to actually fill the gap between their investments. So what people does is that they see capital market as an avenue to actually make the money to fill the gap between their savings and their expenses. So therefore, a lot of people wanted to take care of their family. The standard of living is very high, and they see that the only place they can fill that gap is by investing in the capital market to fill that gap, and that is where the value is.
I know it's quite interesting. You did mention, this government, being a pro-market. I remember when we're tracking the elections, when we're getting closer to, getting our president, our current president. I did notice the NGX started rallying from that period. I think we're around 50,000 points or so.
Yes. If you look at the all-share index now, because all-share index is the index that's used to measure the performance of Nigerian stock exchange. Right from the time it took over, as at the last trading day, the basis point was 252,000 basis points, right from where it peaked from. So that was a massive growth. So like this year now, starting from this year now, market has gained close to 62%. And this month alone, market has gained about 6%. And that's where it's going to be going. Because the policy the government is shunning out is a policy that will favor the market.
Because I keep wondering, because when I track, I like to look at the technicals, and I feel like these technicals have been in overbought territory for the longest time. And I keep asking myself, when you get to overbought regions, there's always that pullback. We've seen, I think the month of May, we can say, was quite slow, even though it's positive, compared to April, that we had about 20% rise. That's for the all-share index. So I'm wondering, do we start to see a decline if, being in an overbought region? Overbought region meaning these stocks have rallied a lot. Is it time to see a pullback, or does this keep going on? Because I guess that's where, investors get it, they get a little confused. They don't know if it's time to actually start, jetting out, taking profit.
Okay. Capital market, the way it works, stock cannot be going up without coming back, and stock cannot be coming down without going up. Do you understand? So I do not believe that it will stop here. We haven't seen anything. So let me give you an instance now. When you look at U.S. market, which is a developed market, now if you look at their GDP, GDP is about $38 trillion. When you now look at their market capitalization was actually double of it, which is close to $70 trillion. Now let's leave that one aside. Let's come to Africa. When you look at South Africa exchange, which is Johannesburg, when you look at their market capitalization was about $1.49 trillion. And when you look at their GDP is about $450 billion. Now, coming back to Nigeria now, look at our GDP in Nigeria. Our GDP in Nigeria is about $285 billion. What is our market capitalization? Our market capitalization is just $115. So when you look at the percentage, we see that Nigeria, it was just 21%. So when it shows, indicate that Nigerian market is just coming up. It's just coming up. Because when you look at this market I've just mentioned now, you say that their market capitalization is always higher than their GDP. But Nigeria now, our own GDP is higher than our market capitalization. So we are getting there gradually. So when you see the stock price going up or the stock price coming down, that is normal. We can't expect the market to be going up without pulling back. When you pull back, it will pull up. When you pull up, it will pull down. So gradually it will get there.
But it's quite interesting. A pullback in this market is still positive because I've noticed, okay, January started off quite strong. February was strong. March, we had a 4% gain, I think, for the month. So much lower than than the 15 or so percent for the month of February. Then April, we had about 20. Then for May, now we're up about maybe 2 point something, about 3%. So I guess that's how you define a pullback right now.
No, let me tell you why that will happen. Let me tell you why it happened. You know, that time we have a bullish trend. That was a dividend period season. That was a dividend season. Almost all the companies have declared and paid their dividend. Only few companies are outstanding now to pay their dividend. So you can say that was why you are seeing that pullback, because people would like to participate in dividend collection.
Pullback is still in positive territory.
Yes. So to me, as a sound investor, the pullback does not mean anything. And that pullback, in fact, is an opportunity for some other people to even enter the market.
Right. Okay, let's look at the economic indicators now. Monetary policy rate, 26.5%. Inflation rate, that's the last one, 15.69%. Exchange rate from the last close, about 1,375.
Yeah.
Then we see the that's the NOF rate, 22% at this point. And we have a lot of young Nigerians participating in this market now. Do they care about the macro indicators, in your opinion? And what do you think is driving, the young Nigerians we're seeing actually participate in this markets and, getting this in new investment culture?
Okay, thank you. Like I said earlier on, like in the past, we have a few people that participate in the market, but now young people are come to the market to take opportunity. The reason is this: the cost of living in Nigeria is so high, and our earning is so small. So I told you that there is a gap between what we are spending and what we are earning. And people see capital market as an avenue to fill that gap. That is why you are seeing young people coming to the market to take that opportunity. That one aside. The second one is this: the level of technology have changed the dynamics of the market. Unlike the past, where you will rely on a stockbroker to buy stock for you or to sell stock for you. Now you can actually do this one at the corner of your home. Wherever you find yourself, you do it. So if you can do it yourself, why can't you participate? So that is more reason why you see more people engage in capital market. And aside that, the regulator, SEC, NGS, and some operator, they have done a lot of financial literacy compared to the past. That is why you are seeing more people coming to the market to come and participate, because they see value there.
And I know majorly we had a lot of youths playing in the crypto market, and they saw that as a market where they could make 1,000x, but we've not seen that for a while now. The crypto market has been acting like a regular market, but more to the downside, so far. So I'm wondering, maybe some of them are now pivoting into the NGX, seeing that there's more action.
Yes, you are very correct.
They have apps.
You are very correct.
Where they can actually trade.
Yeah, this is early start. This is early start. This government has not spent up to 4 years. This is just 3 years. And if God says he's going to win the second time, so that means that he has 5 more years to go. So if you enter early, you'll be able to reap more benefits.
Right. And I'm just imagining at this point, President Tinubu's presidency started off this bull run. So I'm imagining, if he doesn't get a second term, is the bull run over? Could that be it?
Yes. Well, the business, depend. Capital market depend on government policy. So, if he doesn't get the second time, and the person that gets the second time has the acumen to implement sophisticated macroeconomic policy, I don't think there's anything that will change.
Right. Okay. So I guess we don't expect the opposite.
No.
But how financially aware? How financially aware do you think Nigerians are? Right now, or are most of them entering these markets blindly?
Yeah, there are some that enter blindly. There are some that enter with common sense. Do you understand that? Because not all stock are there to be bought. Because when you look at the era of 2007 and 8 compared to this time, they are not the same. Because then it was globally, but here stock prices are reflecting information and the performance of the economy. Now, when you look at our economy, like I told you, our economy, government budgeted about $35 trillion as our economy. Now, look at it again. By 2030, government said they want to make our economy to grow up to $1 trillion. $1 trillion. And look at our economy today. Our economy, like I told you, is just around $285 billion. Now, when you now look at the gap, now, it means that we have a shortfall of almost $790 billion. So how do we fill the gap? And when you look at it, they said stock market is the barometer to measure the performance of the economy. Then it means that if we target $1 trillion, we should expect a great performance in the stock market.
Right. And I want to imagine, some of the investors or new investors coming into this market that are going about it blindly. I don't know if you operators have a way of holding their hands.
No,
at this point.
No, the only thing you could do for clients is to give them investment advice. It's not left for them to take your advice, or they don't take your advice. Your own is just to give them. That is why in our place in Delaware now, we have a research unit whereby all our clients are advised that these are the stocks to buy, these are the stocks to sell, these are the stocks to hold. Now, if you want the advice, you take it. If you do not want advice, because you are the one trading by yourself.
Right. And I just believe, because before now, most investors were burnt. In this market, they've lost a lot of money. Some say they will never, come back, again. But here we are. We're in a bull market, and most of them are back. At this point, even though they vowed they were not going to come back, but it's still shiny right now. They're back again. For you, what are you guys doing to say, you know what, let's make sure we keep them this time, that they don't have to run away again?
Okay,
even if there's a bear market that hits all of us.
No. Unlike what happened in 2007 and 2008, this time around it can't happen. Like I said earlier on, the one that happened around that time was global event, coupled with some other specific issue particular to a market. But this time around, there wasn't anything like global effect. The market is reacting to our microeconomic variable and the company fundamentals. So I don't think any of the clients can burn their hand. See, you haven't seen anything. We have a lot of stock that will still cross above 1,000 naira. Yes, we have a lot of stock that will still cross above 1,000. It's just a matter of time. So give them 1, 2, 3 years. We see, I don't want to mention stock because you do not ask me to mention stock. You see a lot of stock that will cross above 1,000 naira.
We've seen a 10K crossing.
Yes.
Recently.
Yes. That was Seplat.
Yes.
So we have some. You can see Dangote Cement cross 1,000 naira. You can see Arade cross 1,000 naira. And you can see Bar Food is hovering between 1,000 and 900. We see have more of them that will still cross 1,000 naira. Do you understand? Simply because market is the barometer to measure the performance of the economy.
And I believe your operators should also try and do some giveaway for some of these investors to help them.
That is exactly what DLM is doing. At DLM, what we do is that we have developed a very sophisticated trading platform whereby you can trade on stock, ETF, bond on your own. You don't need to come to me before you trade. You don't need to be in Nigeria before you trade. You can be anywhere around the globe and trade. So what we do is that we provide this trading platform. It's very efficient, very robust. And what we do to motivate clients is that we charge as low as 0.45% instead of charging 1.35. So if you are buying from me, I charge you 0.45. If you are selling from me, I equally charge you the same 0.45. Do you know the beauty of it now? Is that at the end of the day, DLM now give a kind of dividend to investors that actually participated. So we are giving 10% of the commission we generated from you. If we have generated, like, say, 1 million naira from you, as a result of that 0.45 we charge from you, at the end of the year, we are going to give you 100,000 naira. That is your reward. So effectively, you pay 0.40%.
Yeah, because I believe investors need rewards at this time, because I've seen some platforms, even though we see a lot of people trading on digitally, at this point, when you see the fees for some of these platforms, they're so high. And, you end up paying so much. Just
No.
Our
DLM is not like that.
Let's make sure these investors stay in this market.
That is exactly what DLM
with the right
is doing.
fees. Fantastic. Thank you so much.
Yes, sir.
Mr. Atonda Isiaka, MD, DLM Securities Limited, and definitely we hope the investing public continues to grow in Nigeria. Maybe we get to 60%
definitely.
of the Nigerian population investing. That would be great. Thank you so much, sir.
God bless you.
All right, we'll take a break now. When we come back, we'll be looking at stable coins in Nigeria. How's it looking so far? That's the moment. Just stay with us. We see stable coins were once viewed mainly as tools for cryptocurrency trading and speculation, but that perception is rapidly changing as businesses, financial institutions, and payment providers increasingly explore their real-world use in payments and money transfers, from cross-border transactions and remittances to faster settlement and lower transaction costs. Stable coins are beginning to reshape conversations around the future of digital finance, particularly in emerging markets like Africa. Join me now is Lasbury Oludimi, which is MD, Yellow Card Nigeria. Great to have you on the show. Lasbury, I know it's because of the rain you couldn't come here to the studio.
Thank you, Ladi. It's always a pleasure to be here.
Fantastic. So we're seeing stable coins have long been, associated with crypto speculation. How are traditional businesses and consumers reacting and adapting, now that's become a legitimate payment solution?
Thank you so much, Ladi, for the question. I think currently the conversation has actually shifted from speculation to real-time utility, right? People are no longer using stable coins to buy Bitcoin or maybe waiting for the rates to increase before they can trade. Rather, businesses are now looking at stable coins as a practical solution to some financial problems. And just looking at where we operate in, especially within the B2B side, businesses are now adopting stable coins to manage their treasury. Businesses are adopting stable coins for invoice payment. And both businesses and individuals are also adopting stable coins for cross-border transactions. So we're no longer speculating, but there are real-time use for stable coins, and both businesses and individuals are adopting it.
Right, and we're also seeing global payment companies and financial institutions, enter this space more aggressively. What does that signal about where stable coins and digital assets are heading?
Ladi, that actually signals some level of maturity, right, within the ecosystem. Stable coins, digital assets is now moving mainstream. Like I said before, no longer speculative tool. So for now, the financial institutions, the big organizations are coming into the space, especially those of them within the payment sector, because they have seen a need for stable coins. And they all understand that the payment infrastructure we have is somehow fragmented, and there are a lot of issues. And they have come to realize the use cases of stablecoins and how stablecoins can actually help them improve their payment rails, how stablecoins can help them increase speed, how stablecoins can help them reduce the cost of cross-border transactions, and how stablecoins can also help them with liquidity, right? We already have those payment rails, no doubt, but there are a lot of issues. And for us to really improve this rails, then there is a place for stable coins, and that's what these financial organizations have come to realize. And everybody is being aggressive, everybody is interested in the conversations around stable coins. Just last week, I was in Kenya for GITEX Kenya, and I was on a panel with MasterCard, DTB, and other financial institutions, right? Everyone is interested in this space. Everyone is looking for, how can I improve my product offerings? How can I improve my services? How can I improve my rails? How can I improve what I already have, right? with stable coins, and it's also exciting to have conversations with this financial institution, have conversations with even the commercial banks, right? Everyone is interested in the space. Everyone wants to be part of this ecosystem. Everyone needs a pie. Everyone wants to have a pie, right? So the conversations are becoming more interesting, more exciting, and everyone jumping into it because of the use cases. There is something you need to do with stable coins.
Right,
For
but
every
looking
player
at
within the financial system, there is always something that they have to do with stable coins, and they are all exploring that.
all right, talking about excitement at this point, I did mention some banks right now, and I want to believe when it comes to remittances, some of these, cross-border transactions, that is supposed to be bread for commercial banks. Are they truly showing excitement about what's happening with stable coins?
Yes, Ladi. Like I said before, we already have the financial rails. Currently, we do cross-border transactions. We do invoice payments through the banks, right? We also do some sort of treasury management through the banks. But there is a lot of delays because of the correspondent banks. If you're sending funds from here to Ghana, Ghana is 1 hour away from Nigeria, right? So if you're sending funds from here to Ghana, the funds will need to go to the correspondent banks before it gets to Ghana. So what the banks are looking for is, how can I make this transaction just straight from Nigeria to Ghana without the correspondent banks, right? The rails are there, but what the banks are looking for is how to improve the rails, how to improve their services. We all do invoice payments, right? We have suppliers that do have partners in China, and they have been paying their invoices. But there are some pain points. One is the liquidity, right? For stablecoin has come to provide that liquidity that we're all looking for. If you look at the markets within the sub-Saharan Africa, there are a lot of markets that are struggling with foreign currency liquidity. And that's why we have stablecoins. So the banks want to take advantage of this liquidity pool and be able to have those transactions without issues. Look at cross-border transaction. How long does it take you to send funds from Nigeria to Ghana? That is just 1 hour away. That even if you want to carry cash, if you're permitted to carry cash, you just need 1 hour and that transaction will be completed. But because we are not allowed to carry huge funds around, they are making those transactions through the correspondent banks that take days, right? But with stable coins, you can actually make transactions, you can make those same transactions in minutes. So what banks have come to do, or what banks are asking, is how do we take advantage of this stablecoin infrastructure to improve the speed, to improve costs, and also to improve our liquidity pool? And that's why everyone is excited talking about stablecoins. That's actually where their interests lie.
Right. I guess the banks would, try and get their bread from this new platform at this point, even if they lose out on other parts. But we're seeing the likes of MasterCard also coming into this space aggressively. What does this signal, in your opinion?
I think it's all about collaboration, right? I think for the partnership between Yellow Card and MasterCard is actually to improve their payment system within Africa, relying on our stablecoin infrastructure to ensure that they make those payments with the speed, at a reduced cost, and also have the liquidity they need. For the financial institutions, organizations like MasterCard coming into the space, it also shows there is something they can benefit from this ecosystem. It shows there is something that is broken within the financial system that they are already part of, and it also shows that stablecoins is actually to solve for that gap, right? And for us to really have these organizations play within this system, it means the ecosystem is actually growing. It means maturity, like I said before, and it also means that they have seen the use cases, they have seen the benefits, and the only way they can actually come into this ecosystem as quickly as possible, right, is not to build their own infrastructure, is not to build their own stablecoins infrastructure, but to partner with people like Yellow Card, who already has this stablecoin infrastructure, and they're able to plug in and make those cross-border transactions at a reduced cost with high speed, and also get the liquidity they need within the African continent. So everyone is jumping into it, and it's because there is something here. So they have us in it, and they want to take benefit of this opportunity to do it.
Right, and talking about everyone jumping into it at this point, at the end of the day, this is technology, this is network. So I try to imagine, we've seen what happened with algorithmic, stable coins. That didn't work out, well. But so far, we've seen, most of the other stablecoin platforms stay stable. But I'm just imagining we've all jumped into stablecoin networks, at this point, and something happens, and all these networks just collapse. What happens next? Do we have backup? At this point, what's the role of regulation in this?
Okay, so Ladi, this is actually the place of regulation, right? There are other businesses that have been built and they have all collapsed. So this is not, it's not only within this digital asset space. There are other businesses, there are other services that have been put together, presented to the public, and they didn't make it, they didn't see the light of the day. But what we need at the moment, Ladi, is to have a strong regulation that will speak to consumer protection. So if there is any issue at the end of the day, there is already a statutory procedure to follow to ensure that whoever that has funds or whoever that is dealing with the stable coins or dealing with the digital asset is able to get value, right? So what I would say, Ladi, is there are so many businesses built. I have not seen the light of the day. It's not just particular to the ecosystem, the stablecoin ecosystem. What we really need at this point is to have a regulation that is fit for purpose, a regulation that is focused on consumer protection, a regulation that defines the parameters for organizations, for platforms. To what extent can you play? What are the requirements? What do you need to come into the ecosystem, right? That would also help us to put the bad eggs out of the way and ensure that only people that have come into the ecosystem to do business, to offer services, are given that opportunity to prove their innovations, are given that opportunity to show what they have built, and also given the opportunity to play within the financial sector.
Okay, so looking at the major stable coins right now, we have the likes of USDT, USDC, and the likes. When Nigerians use these, that means we're kind of like importing. We're importing. That's, in my head. When do we have the likes of, e-Naira, even though I've not heard anything about the e-Naira so far, but there's also CNGN. Where's our stable coin in all of this?
Okay, let me give more context to this, just for people that don't understand the differences. So the e-Naira is a central bank digital currency. That is basically the digital value of our Naira, digital value of our notes, right? And is issued by the central bank. Then the CNGN is a private issued stable coins, a private issued local stable coins. What that means is fine is stable coins, but it's pegged to the local currency, which is Naira. And the issuer is a private organization, right? And for them to really operate, they need some sort of licensing or backing from the regulator to operate, right? Then the likes of USDT, USDC is also a private issued stable coins that is pegged to the US dollars. So you can see there is a similarity between the CNGN and the USDT and USDC because they are both privately issued by organizations. And the difference there is the jurisdiction. The difference there is the currency, right? The USDT, USDC is pegged to the dollars, while the CNGN is actually pegged to the Nigerian currency, which is Naira. So both stable coins are totally different from the central bank digital currency, which is a representation of our local notes. I don't know if that makes sense.
Yeah, that makes sense.
When you talk about stable coins, you're not talking about the central bank digital assets.
Yeah,
no,
the CBD.
You're actually talking about the
CBDCs,
CNGN.
right.
You're talking about the USDT. You're talking about the USDC. Then when you talk about what do we have in Nigeria, that is actually the CNGN because it's pegged to the Nigerian dollar. But because of the use cases, the liquidity, the audit trail, the trust requirements, and also the
All right, seems the network, yes, I did mention it earlier, it's a rainy trading day, and obviously we know how the rains affect the networks. Yeah. All right, Lasbury, but thank you so much.
Actually the difference between the digital assets.
All right, fantastic. I was able to, make sense of that. So you have the CNGN, you have the e-Naira, you have the CBDCs, and you have the privately issued stable coins. Thank you so much. We'll definitely keep tracking this to see how the future of finance continues to evolve. Thank you so much. Lasbury Oludimush is the MD, Yellow Card Nigeria. Thank you for coming on today.
Thank you so much, Ladi. It's always a pleasure to be here.
All right, so now we're going to find out what's happening in the global economy. That's in a moment. Just stay with us.
Yes, good morning, our viewers all around the world. It's the final full trading week of May. Of course, we still have just about a few days next week. But first, let's start with what the expectations across the global financial markets will be now. Global financial markets are entering a highly critical week, balanced between a significant macro data slate, major tech corporate earnings, and evolving geopolitical narratives in the Middle East. Now, the US PCE inflation figures will likely mark the highlight among economic data during the week, as investors increasingly anticipate that the Federal Reserve's next move will be to raise interest rate. But here are some of the most critical and important global events likely to affect FX and bonds market in the week starting from today. We start first that the US stock market is closed for today for the Memorial Day, and at the same time, France, UK, and Germany will be observing their bank holidays. So that's it. So on Tuesday, we have the external deputy governor of the Bank of Canada, Nicholas Vincent. He will speak before the non-profit multidisciplinary research, knowledge, and transfer training center, which is based in Montreal. That name is Cintrano. So they'll be speaking about the country's. The focus will be on Canada's labor market and of course the structural changes in the Canadian economy. So that's it for Tuesday expectation. And on Wednesday, Australia will be reporting its CPI for the month of April, and that will be released that day. So markets will be expecting headline inflation to ease marginally from 4.6% to 4.4% year on year. And on Thursday, US April PCE, we just mentioned, as well as the US Q1 GDP report will be released. So the U.S. Bureau of Economic Analysis is scheduled to release that number on Thursday. The headline PCE is expected to rise by about 0.4%, and this reflects a direct pass-through of higher retail gasoline and energy costs trickling down to consumers. So the upcoming release of the US PCE price index, which is viewed widely as the US Fed's preferred inflation gauge, will attract a lot of attention. So we'll be eyes out for that. And so Thursday will also bring in the second quarter estimate for the second estimate for US Q1 GDP growth. Consensus remains unrevised at a solid 2% alongside corporate indicators, unlike durable goods. And finally, for Friday, the expectation is that in Japan, the Tokyo's Consumer Price Index CPI report, which excludes fresh food, is expected to edge up to 1.6% year on year compared to the 1.5% reading printed in April. Now, this remains just below the Bank of Japan's official 2% target. So, scheduled for release on Friday, that's inflation gauge serves as a primary leading indicator for Japan's national inflation trend following a surprising downshift in April's national data. So that's it for the global expectations for this week. Now, let's talk about what's happening at the moment. Now, European stocks notched their highest levels since March the 2nd today, as hopes for a deal between the US and Iran, which was just announced over the weekend, shortly after the opening bell. So now, the pan-European stocks 600 was over 6% higher, reaching levels not seen since the US and Israel began a joint assault on the Islamic Republic of Iran over 2 months ago. So France's CAC 40 and Germany's DAX each added 1.1%, trading volumes thinner as the UK's FTSE 100 is closed for a public holiday. And so stocks in Europe are tracking their Asian counterparts higher. This is coming after Japan's Nikkei 225 index breached the 65,000 today for the very first time. So markets in Hong Kong, South Korea are closed for public holidays, while US, like I mentioned earlier, will be closed today for Memorial. So now let's talk about this second story. At least about £325 billion worth of dirty money is flowing through the UK every year, and this is according to a research by Finance Innovation Lab charity. That's a UK-based charity that works to transform the financial system so that it serves people and the planet. Now, the figure is equivalent to more than 10% of the UK's GDP and includes illicit funds linked to financial crime, money laundering, corruption, illegal trade, and tax dodging. Now, according to the report by the Financial Innovation Lab charity, this includes the UK's crown dependency and overseas territories such as Jersey and the Cayman Islands. Now, that figure jumps to more than £788 billion annually. So now this report, which is believed to be the first comprehensive attempt to quantify the scale of illicit financial flows linked to the UK with cross-border data on tax evasion and financial crime, is also revealing the extent to the UK's international role as a hub for dirty money from across the world. So now let's go over to Singapore, where we see that today they reported a lower than expected rise in the consumer price for April at 1.8%. When that's lower than the estimated headline inflation of 2%, and that comes on the back of a smaller increase in service, retail, and other goods inflation. Now, core inflation for that country, which strips out prices of private transport and accommodation, came in at 1.4%, and that's compared with expectation of 1.7%. Singapore's Trade Ministry and its monetary authority, however, says that the city's imported cost pressures were expected to pick up and broaden in the months ahead. Now let's talk about India. Just last week we were talking about the Indian currency, which was down, and there was an intervention. But this time, India's rupee has climbed on the back of oil, or the relief in oil prices. Central bank's bank valuation comment. So the rupee strengthened today as oil prices dropped on the hopes of a US-Iran deal, and on comments by the central bank governor that the currency may be undervalued. Now, the rupee has risen more than as much as 0.6% to 95.1150 against the dollar today, joining a broader rally in regional currencies as the Brent crude fell below $100 per barrel. Now, the currency has gained close to 1.5% over the past 3 trading sessions through today, with part of the rise fueled by the central bank's intervention, with the latest one carried out last week. And finally, for today, Israel's central bank is set to cut its interest rate today as the US and Iran appear to be edging closer to a deal to end the war, which started in late February and has been in a tenuous ceasefire since early April. Now, according to 8 of the 14 economists that participated in a Bloomberg survey, the Bank of Israel's Monetary Policy Committee will lower its base rate today to 3.75%, and that's a 25 basis point cut from the 4%, which it initially stood. Now, a minority of respondents looked for no change for that figure. Now, key factors driving the expected cut in the inflation include a stable inflation expectation and recent moderation within the target range support, which has supported modest monetary easing. Now, second is the significant appreciation of the country's currency, that's a shekel, which has increased pressure on the central bank to intervene and assist exporters. Now, economic strain, as well as high interest rates, sluggish growth, and the ongoing impacts of the Iran war, which it also added to calls by economists for cheaper credit to stimulate the economy. So that's global news for Monday. I'll see you next time.
All right, thank you so much, Niete. Well, the markets are still buzzing right now, even though it's a wet trading day right here in Nigeria. NGX is down about 0.22%. We're seeing relief for Bitcoin, Ethereum, up over 1%. Gold is also up right now, but we're seeing pressure still on oil. Bring you more updates at 1:30 on Business Incorporated with Ini John Mekwa. Thank you for watching Business Morning. I'm Ladi Williams. Bye for now.